Mic check, mic check. All right, we rolling. Welcome everybody to Westbank Real Estate Investors, our August meeting. Special thanks to our sponsors, Home Buyer Louisiana, your special place if you're a cash buyer to find investment property, and LeaseCo if you are a real estate investor and you need to lease your properties hands-free, seamlessly. Please give a call to LeaseCo. All right, so special guest today, right? You are a realtor, investor, a bunch of other things, whatever make the cash register ring, right?
There's always a different hat to wear in real estate.
Yeah, absolutely. So what we want to get into today, number one, how you got into the business. Number two, what this realtor life looks like with being an investor and being a realtor at the same time. And your opinion right now on what you think the climate is of everything, because right now you're on the front line, you're really in the trenches, right? Well, I want everybody to give you a round of applause first before we get started. So everybody, we want to bring you in correctly.
All right. Well, my first disclaimer is, if this makes sense, I'm not shy. I'm not opposed to speaking in public, but public speaking is not always my forte. So if I appear a little nervous or anything at any point, that's what it is.
It's okay. Well, I'll help out with that.
Yes, sir. Appreciate it.
But first of all, so tell us your story. So how did you even start off in the real estate?
Well, I got into real estate in 2019 as an agent. After being encouraged by a few friends and colleagues that had been trying to encourage me to do it for a minute, but I always looked at it as, on the agent side, as a lot of self-promotion. And I'm not one to promote myself or be in front of the camera and the mics, stuff like this. But then when I realized that a lot of the successes in certain arenas are people gravitate towards what you do and not just posting your personal pictures and stuff like that. Just posting your stories and your successes will help you navigate and gather more leads and clients like that. So I started up as an agent in 19, went full-time in 20. Then I got my first investment property, I'm gonna say in 2022 or 2023, and I bought probably four in 6 months. My first or second one came from Mr. Tyler right there, and just been trying to get it rolling since.
Awesome. So you say you went full time in 20. What was your past life?
I was a service consultant, a service advisor at a dealership.
Okay.
I had done that for about 8 or 9 years. I was the guy that you come talk to when you need an oil change or your car broke down. I was the liaison between the technician and the customer. So I did that for about 8 years, had some decent success to it, but it consumed my life. It was about anywhere from 11 to 14 hours a day. The money was good, but it was consuming. And I figured if I was going to be consumed by something, I would prefer to be going my own path.
So you were the one that would flip a wiper blade into a new transmission. So
Something like that.
You were flipping in your past life already.
Correct.
Okay.
Correct. You need an oil change, but you may need a few more things.
I understand. We see a lot of parallels with the dealership world and with real estate. What's some of the parallels, similarities that you took from the dealership and brought it into real estate?
Well, I tell people all the time, it's two careers that jump off the top of my head that'll have you well suited for real estate. That's a service advisor, not necessarily the salesperson that sells cars. On the sales side, you may deal with a couple of people a day. But on the service side, you deal with dozens of people a day, handling multiple transactions at one time, multiple repairs. You can have up to 10, 20 cars in the shop at once, and you're navigating and keeping track of each customer's concern, similar to being a waiter or waitress, where you are handling several tables at once. You have to facilitate everybody's orders and make sure it's handled and delegated in a proper fashion. So, those two careers just jump off the top of my head as far as juggling multiple tasks and responsibilities and just being able to keep track of everything in a structured way.
So what I'm hearing, multiple cars, multiple tables, put you right back in the seat with multiple listings.
Definitely.
At one time.
It's a different product.
Absolutely.
That's all it is.
So you first jump in as an agent in 19. What was that experience like coming from the dealership and then going into real estate, trying to build up that momentum?
Well, it was a good transition. I've always been in sales in some capacity since college. A lot of my friends had either jobs in college or money from their folks, and for the most part, I cut hair, and then my first business was selling clothes right after Katrina. All the clothes, of course, all the stores down here was shut down after Katrina, so in late '05 or early '06, I started selling clothes out the back of my truck. And that was when I did that, I got a couple of dollars saved up, and I actually looked into buying a fourplex in Baton Rouge when I was probably about 24 or 23. But I was intimidated at the time when it came down to it, and I backed away from it. And I always tell people, if I had bought that fourplex at that time, I would be retired by now, and may not even have become an agent, just strictly an investor. But we all have the path that we go down, and like I said, I'm not regretful or anything, but it definitely prepared me for what's to come. I got my license in 20, and I just had a positive momentum from that. Like I said, everything I've done since college has been with the public in some type of sales or commission capacity. So I was always in front of people. So people always trusted me with their business, whether it been a haircut or clothes or car repairs or whatever the case may be. So it's just a transition from having the trust in everybody to just a transition to a different product. I always tell people often that, in sales, as long as you have the right product and you carry yourself the right way, you can succeed in many different arenas.
Yes. So for the person that's still working right now and thinking about either becoming a full-time investor or a full-time agent, can you kind of paint the picture of what that experience was like when you were trying to figure out, should I leave my job now, or should I continue to keep the job and just build my reserves on sales?
Well, that was definitely an interesting dynamic because I was making good money in the business I was in, but I knew I wanted more. I wanted more money and more time to myself. So the rug was kind of swept up under me from the job aspect. I had been a service advisor for probably 8-9 years, and for most of those years, if not all of those years, I was at the top percentage at what I did. And I always thought I wanted a management opportunity. And then when I finally did get promoted to manager, I realized that it was not everything that I thought it was going to be. I actually took a pay cut when I became a manager, and that wasn't fun at all. And I'm not sure if anyone is familiar with the dealership business, but when a dealership is sold, the first people that get on the chopping block is the managers. So after being one of the best at what I was doing for 8 years, I had got promoted to manager for 5 months and found my way out the door shortly thereafter because the new owners brought in their management. So the car business is a small world. I had 2 job offers before I even made it home that day, but I had started getting some momentum going in real estate. So I told each of them, I had enough saved up to last me the rest of the year without any money coming in. So I said, I'm going to try real estate, give it my full attention for the next couple of months. And if I need to go back into the car business, I'll give it a shot. But I wanted to give real estate my full attention at that point. And then COVID hit in 2020. So when COVID first hit, people lost their jobs, and I lost 4 contracts within 10 days.
Which type of contract? Dealership?
Real estate contracts. Real estate contracts.
Okay.
So that was a little demoralizing because I had just refused some job offers, just got laid off, and then I had these 4 cancellations. And then the interest rates dropped. And when the interest rates dropped, it just started booming. Everything happens for a reason. Had I not been let go from the dealership, I may not have jumped and quit on my own because I was making $100,000 in the position I was in. Even though I didn't love the hours, I did love the money. Even though I wanted more, it was good money to have. So I do not know how or when I would have quit that in order to pursue real estate when I did. But I tell people often, getting fired sometimes is not the end of the world. Sometimes it's the beginning, and for me, it was a blessing. I'm thankful every day that I was let go when I was let go. The fact that I was let go and the timing of it, I'm very fortunate with the way things turned out. Some people are not as fortunate depending on the situation, but when you have a goal, you do what you can to achieve that goal, and there's no regrets after that.
So for the person that's just finishing their real estate license exam, state, national, they working a W-2 job right now, how do you build momentum to get to that snowball effect, to even get to the point to have the dilemma of should I stay or should I quit? What would that process look like?
Sort of putting yourself out there if you're not one to have traditionally put yourself out there before. Me, I'm personally not a face. I don't always want to be the face of something. So it took me a little minute to wrap my head around promoting and things like that. But I was just fortunate enough to have a trail of people and support behind me for my previous endeavors. But for someone new, it's just really just putting the word out there, letting people know what you do, speaking confidently and what you do, and being yourself. I'm not traditionally a suit and tie type person, so one of the things that gravitated me towards real estate is just being able to be myself, being in a field that I didn't have to mold into something in particular, that my production and my numbers would speak for themselves. Yeah. But for the newer person, it's personality dependent, and it's dependent on your circle. Some people, you have a lot of people who are successful who are not necessarily good at what they do. They just have the right people around them to help get them together. Being in real estate, you come across people who are great at what they do and some people who are not so great at what they do. But, sometimes it's masked when you're not as great because you have a good support system around you. Mm-hmm. So, as long as you have the proper outreach, the proper circle, and you present yourself in a good way, you tend to do okay. Some people have more success than others, of course. But you have some people who are extremely successful and popular who are, not as efficient as you would think, but they still get it done. And that's what matters at the end of the day. So, just getting your support up, being knowledgeable about what you're talking about, and being able to produce. And most of the time, other things fall in place.
Tell us the story about the first investment property. So you built momentum before you quit. Mm-hmm. You had a few dollars saved. You were intimidated the first time you had an opportunity.
Definitely.
So what eliminated that intimidation and put you in a position to purchase that first property? What's that story?
When the market slowed after the COVID surge, I realized that I didn't want to be dependent upon just selling houses and being dependent upon a market and buyers and sellers and things of that nature. So I wanted to get into the investment world and just set myself up for the future as much as possible. And the very first deal I bought was actually saving someone who's going into foreclosure. A relative had passed away, and they didn't know what to do with the property. They couldn't come to terms on who was going to pay the taxes and stuff like that. So I bought that one, did some renovations to it, refinanced it, utilized the BRRRR method, and I've just been rolling ever since.
So how did you finance it with being a full-time agent? I know some agents struggle with being bankable. They may have the cash, but when the bank looks at their statements and their taxes, they could be perceived as a risk. What was your approach to getting financed?
Like I mentioned, I had done well in the dealership business, and then when COVID had the interest rates dropping, I really hit the ground running. Mm-hmm. So I was financially stable enough to be able to purchase that first property. I bought it for $55,000. I bought that one cash. At that moment, I had the wrong outlook on things. I'm not gonna say the wrong outlook. I had a preferred outlook on things where I didn't want to spend the lending money, the money on the loan. So I bought that one cash, did the renovations cash, and then refinanced it afterwards. But I was fortunate with the timing and the past success that I've had in my previous career, and then hitting the ground running with COVID in the real estate business. So I was able to buy that one cash and refinance it, pull some cash out, and then just bought a few more right after that.
Yeah. So what's some of the advantages you have as a realtor and being an investor at the same time? So you look at deals, and what do you see versus investors that's not agents? How are you viewing? What's your approach?
The only real difference is immediate access to information and knowing your numbers. For example, I have a lot of people that think that just because, like when you put in comps, for example, a lot of people will run comps in a radius. Let's say the radius is a half a mile. Well, in that half a mile, you could have $1 million subdivision and the slums in the same half a mile circumference. So it's not just about just looking at the radius, but where these houses individually are located. So it's just about having more information, more knowledge, and being able to speak confidently when you're presenting a deal to someone or negotiating a deal for yourself. Mm-hmm. That's really the main dynamic of it. And just when you're confident and you know what you're talking about, you're able to relay that information to the next person. On the agent side, I'll tell people all the time, whereas part of being a successful agent is relaying your thoughts and wishes to the opposing agent so they can relate it to their clients. Because if you want a $5,000 discount on something, you can't just ask for $5,000 just because. You have to have information and a reason for that $5,000. If you can make it make sense to the next person, they're more inclined to get that concession. Mm.
What's an example of that?
Negotiating, over negotiating before you even see the property. That's one thing I would say, whereas before you, Like you might get a lead on a property, then you try to negotiate the price before you even go look at it. Well, that's not always the best way to go because you have to play on a mental dynamic of things. You have to have give people a reason, some backup numbers or reasoning why you're asking for what you're asking for. And basically, it's just having a general knowledge and knowing how to approach a situation with confidence. There are a lot of investors out there who are not agents who are great, absolutely great, better than some people who have been experienced in different fields for a while. But it just comes with comfort, knowledge, and patience than aggression. I tell people often where real estate investing and home buying in general is all about patience and aggression. You're patient until you find the right one, and then when you find that right one, it's full steam ahead.
Wow. That's insightful. So how do you juggle the hats when you have a deal that you need to be aggressive on, but you have a client that you negotiate on their behalf? What does that look like?
Well, people say often they get into entrepreneurship because they want to set their own schedule and work for themselves, but it sounds good, but it's not always the case at all. I've worked, some days I don't have a break. Some days I don't eat because I'm on the phone or in the field from 7:30 in the morning to 11 o'clock at night. I'm 24/7 for the greater good. So I'm not one of those agents or investors that cut off at a certain time. As long as we talking business and I'm up, we can talk business. So it's definitely, it can be bothersome to juggle sometimes, but it's just time management. And that's what relates back to being a service advisor, being able to juggle multiple things at once, to keep track of things, even when your systems are not in place as they should be. So time management, being able to work well under pressure, and just keeping your cool in certain situations. You have to understand it's not the personal, it's all about the deal and all about the numbers. I had a situation recently on a flip that I just finished. We sold it on Monday, and when we got the inspection request from the buyers was 46 items long. And I shut down. As soon as I saw the amount of items, I shut down without even reading the items. And I sent it to my contractor, and he called me a couple of minutes later. He said, all right, we're going to be on top of it tomorrow. So, he calmed me down. The buyer's agent sort of put me at ease, and we navigated it and closed on it Monday. So even I, being an optimistic person, my glass is always half full, but even I, being, what I like cool, calm, and collected, seeing that 46 item report or request, it got me. And I shut down. If it wasn't for my contractor and the other agent, who knows what would have happened. But we was able to push through it, and we closed on it. So it's just, it's mental strength, mental capacity, confidence, and knowing what you're doing.
So a deal comes across your table, immediately do you underwrite it for yourself, or you outsourcing it to one of the buyers?
I bought most of the properties that I bought for myself, I have tried to sell first.
Okay.
The one I just bought, I bought one in Mid-City last week, and that one I had a buyer under contract on it. He didn't like some of the terms with the contract. The tenant was out of town. One of the tenants was out of town until July 31st, and he wasn't in favor of purchasing the property with the tenant out of town and then coming back and stuff like that. So when he canceled, I always tell people, I will never recommend you buying something that I would not buy for myself. So when he canceled, I believed in the deal so much, I bought it myself. I put some guardrails in place for when that tenant does come back to help navigate that. So we had one contingency that we put an escrow holdback on it. The escrow holdback was $7,500. And if the tenant came back and moved out and caused some damage when they moved out, we will recover whatever was needed to remedy that. The tenant moved out a couple of days ago. I went and did the walkthrough. The tenant moved out over the weekend. I did my walkthrough Monday, saw some things that I didn't love. So I submitted my findings to the title company and to the seller, and the $7,500 was released to me, to us, to touch up some repairs that they had done on the way out. So most of the ones I do buy, I try to sell first. And if the buyers don't believe in it as much as I do, I buy it myself.
All right. Tell us about the escrow guardrail. I like that. So what's the idea behind that? And that was your first time using it, or you seen it before in the field?
It was my first time using it because of how delicate the situation was with the tenant being out of the country.
Okay.
until after the closing.
So what is an escrow holdback?
Escrow holdback is when you put some money aside from a transaction to be held by the title company until it's agreed to be released by both parties.
Okay.
So it was $7,500, and the terms were that it would cover whatever damages the tenant or whoever did upon moving out. They had some drag marks on the hardwood floors from dragging the refrigerator out, a couple of holes in the walls, some furniture items left behind. So, hardwood floors could be expensive alone, just by themselves, without all the other damages. So the seller, he had visited the property after the closing, so he knew I wasn't making it up. Yeah. He's out of town, but he knew I wasn't making it up. So he didn't give me any pushback or anything because, he wants to do good business as well. He didn't give me any pushback. He agreed to it as soon as I submitted the documentation and the photo evidence, and that was it. But that's something I've definitely started to contemplate implementing more and more, especially when you have a situation where it's not your tenant. I bought a few properties where they already had a tenant that came with the property, and it has its ups and its downs sometimes. You never know from tenant to tenant or situation to situation. But I haven't had any horror stories. But I like to have systems in place to prevent any potential horror stories from happening.
Mm-hmm. Yeah. So the way that you advise your buyers to buy rental properties right now, because all of your investments are, so you do some flips and
correct, and
rentals,
some flips.
okay?
Some flips and some rentals.
So how are you running your numbers on your flips? How are you running your numbers on rentals to make sure this is a deal that you'll actually take down?
For the rentals right now, with the insurance mostly, the interest rates are going to be what the interest rates are. But with the insurances right now, for the rentals, it's tricky. You definitely have to have a good price point or have a rental that's in the higher price point, at a higher price point, to be able to rent it out. Right now, let's say you buy a house for $100,000, the mortgage on that $100,000 alone could be $1,000. So $200,000 could be, $2,000. So you definitely have to have the rent potential to be able to afford something on a higher price side. So if I can't make the numbers work on a rental, then it just automatically becomes a flip.
Mm-hmm. Is there a percentage or a benchmark?
Not really. A lot of investors have their, like you said, their percentages. They want to make a certain amount. I just do it case by case. Some properties you might, on a rental side, I have the least margins I have per month on the rental is, well, I'll just say this. On the rental side, anywhere from $500, $600, $700 up is cool, per unit. It's cool. On the flip side.
You mean net?
Yes.
Okay.
Cash flow with a profit.
$500, $600 a month. Okay.
And on the flip side, whatever comes about, some money is better than no money.
Yeah.
So I don't like to pass up on the opportunity just because the margins aren't what I want, because, like I said, some money is better than no money. I have the most recent rental I bought, I had an outside investor because all my cash was tied up. I have 4 projects going on, and I was cash poor at the moment. So I didn't want to miss the opportunity. So when I'm looking at the numbers, I was like, okay, if I borrow $25,000 from him, that's going to be $25,000 more that I'm going to have to finance. But I thought about it, I'd rather make some $100 a month than no $100 a month. So I just went ahead with it, bought it, paid him back the interest on that, and moved on to the next one.
So the perception right now in the market that flips could be risky. What's some guardrails?
Profit margins.
All right, tell us about that.
It's all about margins. If you have the margins to be able to sustain the holding costs for however long it takes, that's what it's all about. It's all about having, when people do flips, they don't always factor in certain costs. They don't factor in the selling fees, paying the agents, paying the potential buyer closing costs. Every buyer is going to ask for closing costs these days for the most part. So you have to have that factor in. So that selling fees with the closing costs for the buyer, the agent fees, and the holding costs. With those things factor in, that has to be included in the budget along with the renovations. So that's the main thing right there. A $100,000 margin can turn into a $60,000 margin very quickly. So if you don't account for those things, it could get uncomfortable towards the end of the process. I had the most expensive property I had monthly with holding costs was $2,500
a month.
And that was very uncomfortable. At one point, I had $8,000 a month in mortgages on properties that were not bringing me income, and with that on top of a slowing, and then on the agent side, as an agent, I had 8 cancellations in 2 months. So those 8 cancellations in 2 months, 8,000 in mortgages per month, and being overextended on another project had me a little uncomfortable. But I knew at the end of the day that it would work out. All the numbers made sense. I just had to let the processes play themselves out and just survive until it did.
Right. What's your advice to the new agent or even the experienced agent that hasn't experienced this type of market right now? So you've been in some uncomfortable positions a couple of times over the past 5 years.
Yes.
All right, but you're still swinging.
Definitely.
So what's your advice to them that is getting punched in the face right now with this market and, insurance and things like that?
Any investor or investment or entrepreneur will have downtimes. Some months you're gonna be shining, some months you're gonna be blurry. Some years you're gonna be shining, some years you could be blurry. So it comes with the territory. It's just about having enough saved up to be able to navigate those moments. With this situation, I had a nice cushion, but then I had 3 things at once: being over budget, slow market on the agent side, and being overextended on my projects. So it was like a perfect storm on the negative that affected me at that point. But I was confident in my numbers. I was confident in my processes. My mom used to fuss at me on the slick every now and then. How you buying another house and you're already overextended right now? I said, I'm resourceful. I know where I can get money if I need to get money. I know that people believe in what I believe in. And I know my numbers make sense. If I ever got down to where I was really in need, I could just sell a property for lower than anticipated and just make up for it like that. I may be cash poor at that time, but my net worth had increased a nice amount over the past few months. So I never really worry about, as uncomfortable as it may be, I know the other side of the rainbow. I know the light at the end of the tunnel. So I'm confident. My glass is always half full. And one thing she asked me is, she was like, well, once you get out of this situation, just promise me that you won't put yourself in this uncomfortable situation again. And I said, I'm not gonna lie to you. If a deal comes up, I'm doing it.
Right.
And if I have to eat noodles for a couple of months, then that's just what it's gonna be. I'm not gonna pass up on an opportunity that I believe in just because it make me uncomfortable. As long as there's nothing dangerously or irresponsibly uncomfortable, I'm going.
Yeah. So on the agent side right now, what is working and what's not working?
I think it's just the overall market. It's nothing really agent to agent that I would base it up on. Many agents are having similar problems. Even the agents who are still doing great, they were probably doing greater before. So everybody's having their down points right now, wherever your downside is. Some agents' downside could be 3 closings a month. Some could be, 2 closings a month. It just depends. It varies from agent to agent. But it's just about staying true to the system, altering certain things as you go along. My systems are not perfect as far as my CRM, consumer relations management is not perfect. That would help me tremendously in my business, but it's not something I've had the time to devote to learning just yet. So over the next couple of weeks, as things smooth out on the investor side, and I'm able to delegate more time to that aspect of it, I'm going to implement those systems and hopefully just get everything a little more streamlined and efficient. What I do right now, I've been relatively successful in that capacity, but I'm always looking for room for improvement. There's always room to improve and be more efficient and more profitable. And that's what it all boils down to.
Gotcha. Being in the mix as an agent, being in the mix as an investor, and just being a part of the investment community, period, have you noticed any loopholes or advantages with insurance that you're able to negotiate or shop around that may be overlooked by some other investors to try to beat down those premiums to get into a flip or a rental?
They have a couple of companies that I've come across that do strictly investment properties.
Okay.
Every company or situation may have its ups and its downs. One I'm dealing with right now, the policy is much cheaper than most, but I'm having problems with them. On the back end, they canceled one of my policies because of some back office stuff. It's a rental.
Okay.
They canceled one of my policies yesterday because of some back office troubles they're having with accounting and stuff. They received the premium from my mortgage company, but it was sent to the wrong account. So I'm having my battles with them, and I'm pretty sure that happens with some of the bigger brand insurance companies as well. But it's just different things you have to go through. I have one insurance friend that I have. He doesn't love the investment-only insurance group that I'm with. He said they may have a cheap premiums, but if you ever need to file a claim, they can prove to be problematic. So, I'm gonna be revisiting that shortly, but there is no real solution to the insurance side. I just tell people, get as many quotes as possible. 3 to 5 wouldn't hurt, and I copy and paste the exact same message to all 3 or 5 insurance providers, send them the information, and who comes back with the best policy, that's what gets the business.
And what's the investor-only insurance company?
They have Riskwell.
Riskwell, W-E-L-L?
Yes.
Okay.
Yes. Riskwell and
that's investment-only insurance.
Investment only. I'm not gonna say they're investment only. I haven't confirmed that just yet.
Okay.
But they are more investor friendly.
Okay.
As well as OBI. So
OBIE, I heard
OBIE,
OBIE before.
yeah. So I use them on a few properties, and then recently I have another local insurance agent who has been very comparable to those companies. I believe it's Foundation Insurance. I'm not sure the company name, but I'm familiar with my representative, and she's been very competitive with the investment-only folks. So I send them everybody. I send everybody my what I need, and whoever comes back best, that's who gets it. I love to deal with I have some friends who I've been knowing forever, who are in the insurance business and other businesses, but in certain situations, it has to be the best numbers.
Yeah.
Even though I may like a person more than the other, if their number is 2,000 more, you can't buy my like for that much. So it just depends on the deal at the end of the day. It's nothing personal at all. It just depends on the deal.
On the flip side, I think most investors, whenever we do a flip, we feel like our flip is the best flip. Nobody pick countertops like me. These cabinets, I'm the only person that have these cabinets. So, with you seeing that, and you also being an investor, what's the reality right now as far as buyers in the market? How picky are they? What's the concessions? You just talked about 46 items on the inspection report. Is that the new normal that you're seeing as an agent and as a flipper right now? What is the new normal?
That 46 item thing is, I definitely would not hope and refer to that as the new normal. You do get extensive reports back sometimes. And that's just with agent familiarity, agent knowledge. I have one agent who was newer, and she submitted the whole inspection report to be corrected. And that's not how this works. It's a used house. We want to get all the major stuff taken care of, but we're not interested in rebuilding this house. So it just basically comes with knowing what you're doing. And as far as the finishes and stuff, I try to stay away from what I call the everybody. Certain finishes are what everybody has in their flips or their projects because it's cheaper. And I try to stay away from that. And I've just been that way with everything for a long time. Rims. I'm into rims on cars. I've been having rims since I was in high school, and I never had what everybody else have. I either order from another source or just something that's unique to my situation or my vehicle or myself. And that's with everything. Shoes. I like to be unique in certain situations without overdoing it. I'm not a flashy person, but I like to be unique in my own styles. For this latest project that I just finished, I did not intend for it to go the direction that it ended up going, but I had to change contractors in the process. And when I changed contractors, I decided to make it a flip. And that's the one I'm over budget on right now. But there's the first one that I utilized an interior designer for, because the design process, it beat me up on the first one that I did. And I told myself I will never be in charge of the design process again, if I can help it. It was a major renovation. So I had an interior designer on this one who also acted as a project manager. So that alleviated a lot of the stress on me. And it's just about coming up with different ideas and making your property stand out. If you have to spend an extra $2,000 to make your property stand out compared to the next one, then do it, because price reductions don't come in the 2000s. When you have a price reduction, when you have a property on the market, price reductions comes in the 5s and the 10s and the 15s and stuff like that. So if you have to spend an extra couple of dollars to make sure that it's it, go ahead and do it. And I've never shied away from that. I had my interior designer, my contractor, we would go back and forth because they would tell me, well, you didn't want to spend the extra $1,000 on this, why are you willing to spend the extra $2,000 on that? I said, because I can see it. I can see the $2,000 difference in this. I can't see the $2,000 difference or the $1,000 difference in that. Like a vanity, for example. My designer had one particular vanity in mind that cost a little bit more than I was comfortable with, and I did not see the money in that vanity. So I went with an alternative vanity, and instead I put money towards accent walls and other touches that stand out, that pluck, that grabs your attention. And that's just my dynamic on it. Put money into what stands out. And definitely don't be shy with doing it, because you try to skip and penny pinch on certain items, and it's obvious. When a buyer walks into the property, it's obvious that something else could have been done to make it better. And when you're doing flips, you want to try to minimize the questions. For example, if you have a stain on the ceiling from a previous roof leak, you can have a brand new roof on the property, but that stain will cause questions. And you want to knock away as many questions as possible. So you repair that stain, and that'll knock off a question, and knock off a concern. You want to have somebody to have confidence when they're walking to your property, not seeing things to be questioned. So a lot of people have negative perceptions of flippers and builders and things of that nature. Yeah. A lot of times those people aren't all the way experienced in real estate. A lot of times it's outside chatter, talking in on the game from whatever negative experiences they may have had or heard of. But for an experienced investor, a lot of things aren't as bad as what some people may think. But also with investors, they try to, it's not about making $1 million on every project. It's about doing good business and moving on to the next one as quickly and efficiently as possible. So if I can do that and have the property in great condition, being better than the competition, because I always scope out the competition and see what price point I'm at, not just the sold comps, but the current ones on the market. And as an investor or an agent, you have to be self-aware and have a reality of the situation, whereas your house may be priced for $250 and you're confident at $250, but if you look on the available houses on the market, you'll see that somebody could buy much better for $250. So, you have to cater to the buyer. The buyer can make or break you, just like a contractor can make and break you. So you have to make sure you do it right. You can cut back on things that are cut backable, but for the most of it, quality work, and it usually speaks for itself. And not always, because the markets have its times. They have very beautiful, gorgeous properties that just sit. And you can have a house next door that's not beautiful or gorgeous, and it sells. So there's no one size fits all. It's just the buyer is the buyer's call. It's a buyer's market, and even when it's not a buyer's market, the buyers still make their decisions. And that's who's going to put the money in your pocket. So you want to make sure they're satisfied and pleased with your product, and make sure your product stands out. One thing I've been doing recently is different finishes. I like blacks. I like the black countertop, not black countertops, but the black cabinets. Yeah. So that stands out a lot. Gray has been popular for a while. It's situational, but I just like to do things that's different. And when you're different, you stand out, quality product, good price, and that's it. And I tell people, also one thing I tell people all the time is efficiency. The process involved in a flip can relate to the efficiency in selling the flip. For example, if you have what was supposed to be a 3-month renovation that goes into 6, 7, 8 months, that could also lead to staying on the market longer, and not necessarily a cause and effect type of thing, but just the karma of real estate, the chi. When you have a smoother process, it tends to sell quicker. I've seen flippers get in and out of a renovation in a month and a half, and the house is under contract in a week and a half. And then you see some that take 6, 7 months to a year to complete, and then it takes 6, 7 months to a year to sell. So it's just about being as efficient as possible, because the longer you take on a project, you could miss your buyer. Your buyer could have just bought a house last month, and you missed that buyer because you're taking a month longer on the renovations. So everything is about being efficient. I tell everybody with real estate, everything is ASAP. There is no tomorrow. Patience, then aggression. If you see something you like, get it. A lot of people talk about the economy and the rates and insurances and things like that. And it goes back to some money is better than no money. You're not building any equity by sitting on the sidelines. So you may be waiting for better rates or whatever the case may be, but in the meantime, you're not doing anything. So I have no fears when it comes to the market hostility. I'm all in. Yeah. My margins protect me. So as long as I have good margins, I don't have fears about anything. This project that I'm overextended on, that I'm over budget on, I'm $30,000 out of pocket on that one. But I'm confident in the numbers. So, I was willing to roll with it. I didn't put a leash on my interior designer. I didn't have a ceiling on my interior designer. It was just item by item. Whatever you recommend, I'll see if I like it for the cost, and we'll go along with it. So even though I was over budget with the bank's money, I still believed in her vision. I believed in my contractor's work, and I believe in the end result, and I always believe in the numbers. So I just roll forward with it.
Talk to us about team building. So to build a trustworthy team like that, I know you get exposed to other people's teams by being a realtor. You get introduced to several vendors, and some people have their own relationships. What's your approach to selecting team members for yours? So, for example, how did you find and vet and test out your interior designer and your contractor? What does that process look like with building a team for you?
Background checks, not official background checks, but referrals.
Okay. Talking
to who they worked with previously. And like with my contractor, for example, I went to high school with my contractor. With my main contractor, I went to high school with him. And we hit and missed on a few projects as far as he would come out and give me some numbers, and I chose a different direction until we just got a better relationship going, and we started doing some projects together. I like the way he works. I don't have to babysit him. So that's very important with working with a contractor, somebody that you don't have to monitor and watch every step of the way, because that's time consuming, it's aggravating. And my interior designer got a referral from her from a builder that I know. He does many new constructions, and that's who referred me to him. I saw him in Floor and Decor one day on a project. I was in Floor and Decor with my mom and I forgot who else, and I saw him, and I was fed up at Floor and Decor because this project was beating the hell out of me. So I was fed up. Sorry, it was beating me up. So I talked to him about his interior designer because he was mentioning that he don't even do this anymore. He said the only reason he was there is because it was entry-level property that he wasn't trying to put the best, most expensive items in. Mm-hmm. So he was there doing that. He said, but for everything else, he uses his interior designer. So he sent me her information. I did some research into some of the projects that she had worked on and made a move. And we decided to move forward, and it came out great.
Yeah. Wow. So,
like some people, I have a lender that I work with who makes it a point to not refer contractors because they say you're only as good as your weakest link, and your positive experience with a person may not be the same positive experience for the next person. So to keep his name clean of sorts and to stay out of any potential disputes, he doesn't refer contractors at all. And that's sort of how the game goes. I had a contractor who I worked with before who I had a glowing recommendation from somebody who referred him to me, and him and I did not work well together at all. So, that was a lesson learned with that, and that's when I just realized that just like with everything else, you get what you pay for. So everything that's a cheaper price, it can wind up being more expensive in the end. I had to let go of a contractor in the beginning of our process one time. I love him, great guy, but it just didn't work out on that particular project, and I just had him do another project that was probably better suited for what he had going at the time. Yeah. So it's just about getting referrals, seeing examples of their work, because the wrong contractor can make or break you, literally. You could be 7 months behind on the project, and if you don't have the sufficient funds to account for those holding costs, it could put you into foreclosure. So having the right contractor is vital. If you have to spend $5,000 more on this right contractor, spend that $5,000 more because it'll definitely be worth it in the long run. Because while you're trying to save a couple of thousand here and a couple of thousand there, those holding costs add up. Those holding costs are a couple of thousand per month. That's not going away. So just do it right the first time, and hopefully everything works out for the best.
And on the rental side, you outsource management or you self-managing?
I self-manage the ones that I have right now. Knock on wood. I don't know if this was wood or not, but knock on wood. I haven't had any situations that require me to be needed as much. Currently my most expensive rental has been my most problematic rental. We had some work done and it was vacant after we got the work done. No one had lived there, of course. And a couple of items that needed to be attended to, we did not realize until someone actually started living there. So, and also we didn't have the gas on. That was something that I overlooked. I did not have the gas on, so we had to get a permit for that. So you can understand the tenants were definitely frustrated. They moved into a property that did not have hot water, didn't have a working stove because of the gas situation. So I did the best I could to remedy that, get that done as fast as possible. Realized that Jefferson Parish moves a lot quicker with permits than Orleans Parish. I'm still fighting Orleans Parish after a month and a half on an electrical permit. Got the Jefferson Parish permit done within a week. So that was a blessing on that end. And then they was also out of town they moved in and then went out of town immediately. So that helped a lot with them not having that immediate daily need for the hot water, where I had some grace with that. So it's just about just having good work done and just being able to facilitate things as much as possible. As I grow, I hope to have the need for professional management, but with the current setup I have right now, I've been doing okay with managing myself. I was offering services as property management at one point until I got so overwhelmed with the agent and their investor side where I had to take off that management hat and just only do my own managements. And hopefully as I grow, I get to the point where I outsource it to someone like yourself.
Yeah, we appreciate that.
Yes, sir.
So right now, on the leasing side, so the buy side is one thing. So what are you seeing as far as when you buy your properties, you underwrote them, you may have underwrote on your performer that rents were going to be one thing, boom, then you hit the market. Are you seeing something different from what you thought it would rent for versus what it's actually rent for?
Never. Like I said, I'm very calculated with my numbers. I'm aggressive, but it's a calculated aggression.
Okay.
So usually what I believe the rent's going to be, that's usually what it is. Because I do my research and I do my homework because I'm careful with my money, and I'm even more careful with other people's money. So I try to do my diligence and not get caught off guard by anything. I run my initial numbers through the direct market. Then I run secondary numbers through what handle or a voucher program may pay. And as long as both of those numbers are comfortable, then I usually go ahead and move forward with it. The biggest problem I have with renting out a property to a tenant is being picky as to who lives in the space. I want to make sure it's somebody responsible, someone who cares about my space as well as themselves. It's just about picking the right tenant, and there's no certain demographic or criteria other than being seemingly responsible. You know, someone can look great on paper and then be a horrible person. You know, if you come to a property that you want to rent out, I would always
for the showing.
Yeah, for showing. I would always recommend as a tenant that you put your best foot forward because you just want to put your best foot forward and make yourself as presentable and likable as possible when you're going to see a property, and just making sure that you choose wisely because it's going to be someone that's going to be in your property. And you know, I have Section 8 voucher. I have voucher tenants. Most of my properties are vouchers, aside from the townhouse that I just rent out in Metairie. All my other ones are just about vouchers. I have one that's been on the market for more than I would like because I'm being picky about it as it relates to the voucher program. It's a 5-bedroom, and I would like the 5-bedroom voucher. All the 5-bedroom voucher candidates that I like don't like me. And what I mean by don't like me is they didn't want the property. So, you know, just navigating the process and knowing better for the next time. I could have been taking a 4-bedroom voucher, but being so picky that I passed up on a lot of good 4-bedroom voucher candidates, and now it's to the point where I'm just stubborn in it. And if I have waited this long, then I'm just committed to a 5-bedroom voucher. But had I gone with a 4-bedroom voucher initially in the first couple of weeks, that would have been a smarter move, because now I have $2,300 per month in missed income. Where had I gotten that 4-bedroom voucher sooner, I would have had it occupied, and maybe not for the monthly amount that I would have wanted, but at the end of the year, I would have had the same amount because I'm missing money. I'm missing income right now. That's the mortgage that's being paid out of pocket. So, on the landlord side, it's about, making good choices when it comes to having a tenant that's on the same page that you're on, and just being responsible in what you have to do. And if you have a property management, just making sure you're doing what you have to do on the property management side with your property management, making sure your accounts are good, making sure your contract's in place, and making sure that you are responding to your property management when they have a need. Yeah. So that's basically it. Just being responsible and doing good business will carry you a long way.
Yeah, absolutely. What tools are you using to self-manage?
None.
All right.
I have Turbo Tenant set up.
Okay.
Turbo Tenant is cool. The only thing I don't love about Turbo Tenant is that you can't talk to somebody on the phone. And when I have a question, like right now I have a question where I have 2 different businesses, but I only know how to
Oh, you mean
have
support, like
tech support, customer support, because right now I have a problem where I have 2 different businesses with rentals on the platform, and I don't know how to add a secondary bank account. So on a rental payment that was made went to the wrong bank account. So I don't know how to remedy that at this moment. But so I don't have any platforms that I can recommend or any systems that I can recommend. I know there's several out there, but that's why I said I'm going to be dependent upon a property manager soon, just so I don't have to be dependent upon that and having navigate that, because it's getting to the point now where I'm looking for more time and efficient processes to delegate more time to growing the business compared to operating the business. So like your business is in large part property management, so you're looking to grow that, and I'm looking to grow my business so I can have the need for property management. Yeah. So that's just my angle on that dynamic of it.
Yeah, and on the flip side, what tools are you using? Is it only your iPhone and spreadsheets, or have you found some type of tool? You mentioned CRM. Is there anything that pulls together a project for you to keep tabs to become efficient?
Not really. Now? I have. I'm not the most computer savvy person, so that's part of the reason why I'm looking to hire assistants and outsource some things to help me get things more efficient, because most of my notes are right now on paper. I have a couple of different notebooks at the house, and I just jot down my notes. I just started using notes in my phone as an added source, but I'm not the greatest with digital record keeping in that aspect. So I'm looking to outsource that and get more knowledgeable and get familiar with it and learn more as I go. I haven't been able to do it just yet because my hand has been in so many different pots lately that I haven't had the time to learn something new, like insurances, like life insurances and things like that, and other investment, stock market and things like that. I want to learn different things, but I need the time to learn those things. So I'm looking to delegate different tasks to take some things off of my plate so I can become better at other arenas and dip into those things as well.
Yeah, definitely. So what are you looking for right now, and how can we help?
Well, right now, I'm looking to get on more buyers lists on the assignment side, on the off-market side. We all have different seasons in real estate, whether it's an agent as an investor. Sometimes you have more sellers than buyers as an agent, as on the investor side and the agent side. Sometimes you have more leads than people. You have more property leads than clients. Right now, it's been a little slower. I don't know if it's just me and my contacts, but the wholesale side, the off-market side has been a little slower than usual. So right now, I just have buyers that's that's waiting on the right opportunities to present itself, and then we're looking on to jump on it as soon as possible.
Patient and aggressive.
Yes, sir.
And what about on the rental side? Is there a specific zip code, property type, space?
Not at all.
Okay.
If it makes dollars, it makes sense. That's the way I look at it. If it's within driving distance to me, I'm all for it. And I do a lot of business on the agent side. I do a lot for clients who live out of town. I have a lot of clients who've never stepped foot into the property. They just rely on the details and the footage that I send them and the inspections and everything to make a smart decision and trust me with that dynamic of it and take it from there. But it's, there's no one size fits all or no blanket to throw over all situations other than knowledgeable efficiency and margins. Those things will pretty much cover you in most things in life as far as investments go, and just having the right people on your team and having your numbers together and just being prepared for something that may be unexpected.
Yeah.
So, that's just pretty much the gist of that portion of it.
So what's your advice to investors right now? So as a realtor, you get to peek into people's shops and how they operate. What's some of the things that you're seeing people doing wrong, and what's some of the things that you picked up that you added to your toolbox that you probably would advise a new investor to try this or stay away from this and try to make sure that they get the most out of this current market right now?
The main thing that I would tell to investors is the cheapest isn't always the best. That goes into many different fields, but a lot of people think that because they're getting a property for a good number, that it's a good deal. Where me, it's the overall. Like when I shoot down a deal that's brought to me, and the person asks for feedback, it could be the numbers, it could be the curb appeal of the house. If the curb appeal can't be improved, no matter how good the numbers are, if it's ugly, it's ugly. So it has to be the curb appeal, the numbers, and the potential of it. The very first place I walk into when I look into a property for a flip, I walk straight to the primary bedroom. If I can't make sense of the primary bedroom and the primary bathroom, if I can't restructure it a way to make sense, then this property is not for me. Because no matter how good the rest of the house is, if the people who are paying for the property aren't in love with where they're going to be spending their time in the bedroom, the primary bedroom, then it's not going to be a winner. If I can't reconstruct it to be a winner primary suite, then it's on to the next property.
That's good.
So like just now, I was talking to a guy who presented a property to me in Gentilly, and the numbers were honestly good on it, but it was ugly, and I could not find a way to enhance the curb appeal of it. So I just had to pass up on that opportunity.
Yeah.
So it's not just about the numbers, it's what you can do with the property. And there's a lot of investors who get caught in a trick bag by getting a property just because it's cheap and not looking at the overall deal of it. And it's different. It varies sometimes from a property you intend to be a rental and a flip. On the rental side, it's still, it has to have some curb appeal, but it doesn't have to have the perfect curb appeal as you would on a flip, if that makes sense, as long as the interior is nice. Growing up, I remember one conversation in particular when I was in middle school, and a young lady was being ridiculed about something, and because she was living in the projects, and she was getting some grief about living in the projects, and she said, "Yeah, we live in the projects, but I guarantee you, my mama keep the inside of our house up better than your mama keep the inside of your house up." Right. And that just stuck with me, for a long time, forever, to this day. Whereas as long as you keep up the interior, it'll be desirable to someone. It's just that home buyers tend to be a little more picky on the curb appeal than a tenant may. A tenant just wants for the most part, a comfortable environment that's clean, dependable, and that they can live in comfort without any real problems. For a buyer, they want the curb appeal, they want everything to be right, a little bit more than on the tenant side. So it's situational. Some projects are better for a rental and some are better for a flip.
Yep. And Steve, you could come up, we get started. We need one more question. You mentioned the bag of insurance professionals that you deal with. Have they given you any tips on physical things you could do to the property to try to beat down the premiums that you can kind of do during renovations. So I know fortified roofs is
Yeah.
one thing. Are there anything else that you heard recently that moving forward you'll do this so you can get a lower premium?
The main thing is the fortified roof.
Okay.
That's been the most widely utilized form of bringing down rates and most popular one. Other things are hit and miss. On the investor side or the homeowner side, for that matter, I wouldn't recommend going and spend $20,000 on new windows, storm shutters or anything like that, just to get a $2,000 off a year on your policy. If it fits within your budget, then great. But I would not stretch my budget just for something like that. Most buyers, and then on top of that, I had a conversation with a client today where everything doesn't increase the monetary value of the property. Just because you put a new roof on a house, that doesn't increase the monetary value of the property. It may help with your insurances, yes, but it doesn't necessarily help with the value of it compared to what a buyer is looking for. So there are some items on the insurance side that could help. Mostly is the roof. If you're getting a new construction built, then that's the best time to implement some of the insurance cost-saving measures that you can have, depending upon the cost related to not having it done for the insurance purposes. Let's say storm shutters, for example. If storm shutters cost you extra $5,000 on a new construction, perfect. Go ahead and do it. But if it's something that you're already living in and that $5,000 may strain your pockets, then just leave that alone.
Yeah.
And just ask the insurance agent for other ideas. Everything is case by case. Aside from the fortified roof, everything is case by case.
Okay. But for sure, if you have it in the budget, storm shutters, fortified roof.
If your desire is to decrease your insurance premium,
Yes.
and you get that advice from an insurance agent, then yes. If it's within your budget, perfect. Go ahead and knock yourself out.
Gotcha. Perfect. We'll take audience questions, but I don't want to forget first. How do we get in touch with you for the wholesalers that do have deals, for the investor that have too many flips and want to wholesale it to you, and for the potential clients that's looking for an agent that's also an investor?
I am
What's the best way?
always on the hunt for something, whether it be for myself or for my clients. Like I mentioned earlier, most of the time I put clients before myself. So I try to sell it before I buy it. So I can be reached by email, rb06su@yahoo.com. That's R as in Ricky, B as in Bolton, and I put 06, that's he I graduated, Southern, and the SU, Southern University.
Okay.
I can reach by phone, Facebook, Ricky Bolton Jr., Instagram. I believe Instagram, I'm Realtor Ricky. Yeah, I believe that's it. Realtor Ricky B on Instagram. But I'm not hard to find.
Okay. All right. Questions from the audience? No, Steve, okay, we got one.
Yes, sir.
So I specialize in helping with renovation products, mainly for a lot of businesses. I worked on like 2 or 3K is your standard renovation loan for like a homeowner.
Right.
Living in the property, but you have a home style.
Yes.
Right, that's available for the investor. So do you use other forms of financing for your?
For my personal projects, I go through. I did 2 projects cash, and then ever since then, I've done hard money loans through a hard money lender on those. I do have on a listing that I have right now for a seller client. We just received an offer for FHA 2 or 3K. So we could definitely talk after this, and I could get some insight from you on that process. I haven't processed. Let me see. I can't recall exactly, but I do not believe that I've processed a 2 or 3K transaction just yet. So I definitely could look for some insight from you on that. But other than that, as long as the deal works, it works. So no matter where the money is coming from, as long as it's a reputable source and everything looks good, we roll with it.
I want to add some of the things with the questions that you asked concerning like the homeowner insurance, those windows. Like with that type of loan, you can finance a lot of those repairs. Like I'm dealing with a client now. He refinanced. He did his whole house brand new. And he pulled out the equity. He used a 2 or 3K loan. And a lot of those repairs are put him in position to
Definitely. Yeah, and some upgrades or repairs like that are similar to solar panels. You know, solar panels aren't cheap. You know, you pay however much you pay for 10, 20, 30,000 with the hopes of it offsetting your electric bill. So I look at things like those double insulated windows and some energy efficient windows in the same category. Where if you want to spend the upfront cost to get it done for the savings in the long run, the perceived savings in the long run, it's just a case by case basis. Everybody has their preferences, so it's just case by case, and whatever the person has in their budget, in their preference, whatever works for them is perfect for them. So I don't have any yeses or nos from project to project. It's dependent on each person. What I would do for myself, someone else may do differently. I may have something that I may not do myself, but knowing a client's situation would strongly recommend that they do it based upon their needs and desires. So it's case by case.
Yep. Next question.
Yeah. Sorry for walking in late. I got up a little late. I have offer on my house. Probably haven't lived with, and the real estate lady has to actually get on the same page with the owner of the house. She's not discounting the house to do a quick sale. Hopefully she'll catch on. But anyway, my question: the latest offer is someone's doing an FHA. I always thought you have to do the PSI, which is the hugest scam in the world. Because, like, if you don't keep up with your mortgage, you're foreclosed on. And the bank has that money that you've already paid into it for 7 years. And they're selling your property that's already increased in value. So that's the hugest scam on the face of the earth for people that's already struggling to buy their first house. And I always thought, like, an FHA requirement was like 10%. She says it's 3.5%.
Correct.
Now, the only thing I hear about FHA is there's so many extra hoops for the buyer to jump through. Is there any extra headaches for the seller?
There are not any extra hoops for either side to jump through. On a buyer side, the only thing that that would affect them on an FHA compared to conventional as a buyer is, let's say, student loans, for example. 3 of the cancellations that I've had in the past couple of months where I represented the seller, and the student loans came back into effect. And when you're behind on your student loans with an FHA loan, it's a governmental loan, so it affects the student loan process affects that. It could hurt your credit situation in that capacity, yes. On the seller side, the only difference between a FHA and conventional loan is certain things like chip paint. Like on an FHA loan, the house has to be move-in ready. It has to have a stove, a heating source. Well, let me take that back. It has to have a stove, has to be move-in ready, no chip paint, but it's nothing stringent at all. It has to be a good condition and move-in ready. That's pretty much it. It doesn't have to be cute. It doesn't have to be extraordinary. It doesn't have to be updated.
But I got a different perspective. I just thought there was like extra things that the seller had to do to close that.
Once the appraisal is done, once the FHA appraisal is done, that'll let you know if anything needs to be addressed. The most common things that come up on an FHA appraisal that are deficient for the appraisal is smaller items like paint deficiencies and something not being fully painted, or wood rot, or something like that. So if it's a good property overall, whatever comes back from an HOV inspection will be minimal for the most part. So that's nothing to shy away from at all.
You mentioned appraisal. What I'm getting away from is I finally have the house priced to where it should be priced at. Because before it's like, you know something, I'm tired of haggling. I've had 3 people pulled out of buying when they set the price. It was a cheap price. That's close enough. I'm out of here, right? So I'm thinking, no, I'm not doing that, because when I discount the house, that's when they back out. But what I'm wondering about is, with houses still selling above appraisal, I don't want the sale to have.
No house is selling above appraisal.
I don't want the house conditional on appraisal. It should appraise for that amount.
Right.
But I don't want them to come back and say, okay, well, you got to take 10,000 off with the appraisal.
Well, it just depends. Well, very few situations will sell for above the appraisal. If a house sells above the appraisal, that means that buyer just absolutely loved that house so much that they were willing to go above and beyond and take extra out of their pockets. One problem you may be having as it relates to the price, and you say you had 3 buyers back out, were those buyers under contract or just showing interest?
No, we had the purchase agreement and everything signed, and they just, well, another thing too, you learn from doing stupid things and paying attention. All right, when they need more than 2 extensions of time, get ready. They're not gonna
Definitely. You know, something, you know, where there's smoke, there's fire.
Courtney and the gentleman from the last month, I can't remember his name, Christian. And y'all do this for a living and people back out on y'all.
Yes.
What's the deal with people following through?
It's just most deals, most contracts fall apart during inspections. So that could be the concern. They could be doing their inspections or their diligence, and they find other things that are wrong that'll make the price a little too high for them. So with you having 3 people that have backed out, it would definitely be time for you to reconsider your pricing structure on it to factor that in, because one person may be mistaken. 2 people, 3 people, something's going on.
Well, what it is when it's as is, that's it, period. All right, but then they want the inspection list. After we've signed this purchase agreement, now they bring me the list.
I got you. Yeah, we could go about that particular situation in a little more detail.
You gonna stick around, Ricky?
Yeah, definitely.
Okay,
We could go in that particular situation in a little more detail after everything, and definitely try to help out as best as I can.
Okay, we have one more, and then Steve, you want to come up? Yep.
To be honest with you, on the hard money loans, the main thing I look at is the down payment percentage. When it comes to interest rates and things like that, I don't. People ask me, "Well, is that a high interest rate?" I don't care. It's a short-term loan. You know, I'd rather that than nothing. So whether it's 7%, 8%, 10%, it's a short-term loan, and the difference between 8 and 10% on a loan like that may be $30 a month. So I don't factor that in at all. There's just other terms associated with it. I have a recent investor friend who has a lender who has a 3-month interest-only term, and I don't recommend that because that means you have to either sell it or refinance it within 3 months, and that's too short of a time frame. So most of mine are at least for a year. All of mine are at least a year to give myself some cushion, because when you refi, you know, that costs money. That's not free. So you want to have that for as long of a period as possible. On the hard money lender I go through, for your first property or 2 or 3, the down payment is 20% of the purchase price, and they fully fund the renovations. So then as you grow, you know, those numbers get a little more favorable. I got down to 15%, and right now on most projects I'm at 10% down payment. Just depends on the project. Sometimes if the renovation is more than the purchase price, that could make the down payment percentage a little higher. So it's situation by situation, but the main thing I look for is just having that year term before I have to refi or go another direction. But other than that, I'm not terribly particular about, you know, the only other thing I don't love is the closing costs. You know, no matter how many properties I buy or close on, I always question the closing costs because, you know, just I don't know, it's just in me. So no matter how many times I do it, I always question the closing costs. But it never hinders anything. It's just as long as the numbers work, hiccups are okay.
And what's some closing costs that stick out to you besides points that you would question for people that never done a hard money loan? When they get that HUD-1, what's some of the items they need to look twice at and ask about to either get reduced or eliminated?
Insurance, of course, for the most part, because that has to be prepaid for the year. And everything else is just lender to lender. Just because you may save $1,000 with one lender doesn't mean that that's the one to go with. It's about relationship building. With the lender I have now, I've done quite a few projects with him, so we're due for a line of credit, a $250 line of credit. And after a few more deals after that, you know, that jumps to $500. And then a few more deals, that jumps to $1 million. So I'm hoping to be at that $1 million mark if all goes well around this time next year. So I don't always shop for the best. You know, I get presented all kind of different opportunities for different lenders or different situations, but you know, it's just about relationship building and offerings. And when I say offerings, it's not just about one deal. I don't mind spending more on a deal if the relationship is there, but as long as everything overall is cool, you know, I'm cool. It's not all about always. It's not always about the saving money up front, but just the long-term goals.
Yeah, perfect. Well, everybody clap it up for Ricky Bolton. Thank you for coming out.
Yes, sir.
Steve gonna come up for needs and wants.